Your market news now. Investors will be watching U.S. President Joe Biden and congressional leaders as they're set to discuss the debt ceiling issue. Meanwhile, tomorrow's consumer inflation data may provide further clues on the Fed's path and set the tone for equities. Locally, Sibanye-Stillwater says its PGM output declined nearly 10% during the first quarter, impacted by power cuts in South Africa and operational disruptions in the United States. Despite operational challenges in South Africa, Sibanye maintained its Southern African PGM production guidance for 2023, but it cut its forecast for the U.S. PGM operations. To talk to us about the latest when it comes to the markets, we are joined by Martin Smith from Anchor Capital. Martin, thank you so much for your time. Let's take stock from your perspective in terms of what's driving local and global markets right now.
So I think we've had quite resilient markets this year, obviously a little bit of a sell-off in Feb. So there is a little bit of, not excitement, but a bit more positivity than we had last year. I think at the moment, though, you've still got the longer-term themes around inflation, interest rates and the like. So that's definitely going to be in the back of investors' minds, specifically going into tomorrow's CPI number in the States. But I think in the last week or two, I think it's the US banking regional crisis and how kind of systemic or what the contagion effect is there that's kind of in the front of consumers or investors' minds at the moment.
The one thing I suppose will be a longer theme, especially for investors and a lot of the listed companies, is the theme of load shedding, especially when you read the Q1 update from Sibanye-Stillwater. Were there any highlights for you as you went through that SENS report?
So I think with regards to Sibanye, I think we were looking for maybe better volumes growth from the business across the board. I think a little bit disappointing from that perspective. You've seen the share sell off around 5% today. I think you also had, and you mentioned a little bit earlier, is you've had some production issues around the US PGM operations, which also weighed quite heavily on sentiment on the share. So look, gold prices are going up, so that's been good for them. But yeah, I think a little bit of a mixed set of numbers today.
A couple of months ago, transaction capital is all we spoke about, and tomorrow the company will be releasing their earnings. Any particular sort of line items that you're going to be paying attention to when they release their financials?
Yeah, you're 100% right. I think we know on the back of the update we received a couple of weeks ago that the numbers aren't going to be great. So that's very much in the share price now. And you've seen that share price kind of melt back down towards that 10, 11 Rand level after having a bit of a recovery on the back of that kind of precipitous sell-off we saw. I think the big thing is not going to be these actual numbers, but what's the outlook going forward from a SA Taxi perspective as well as a We Buy Cars perspective. So outlook is going to be very important. And I think also looking at the SA Taxi business so far as credit metrics there, what does their loan book look like? I think that's going to be quite a key thing to look at from that perspective.
I want to move things stateside for a bit and I suppose get your perspective when it comes to this kind of tension that still exists, I suppose, from the side where we're still trying to see if there's any more banking stress still left in the system, and also the idea of having resilient data that's coming through, especially following that US jobs report. Are you seeing that tension? Yeah,
I think it's a good point because you've got, like you mentioned, very resilient data out of the States. That jobs numbers was really good last week. But then you've got this potential storm brewing in the background around the regional banking crisis. Look, we, for now, don't think that there's any contagion effect. We think it is a function of high interest rates, and there might be one or two banks that still might fall from here, but we don't think it's going to be a larger contagion effect. And I think it's quite well summarized by Powell, who spoke last week, and he said, listen, they know it's there. They know that there is this thing going in the background. They don't know the extent of it and what's happening from a liquidity perspective, and they need to wait and see how things play out. They're keeping a very close eye on it. So I think that's going to be our view for the kind of next few weeks and months. But for right now, we think it'll be fairly limited insofar as its impact.
Speaking of your view, then, does the US jobs report from Friday change your view in terms of where the Fed might go? And on that note, what was your view?
I think the market is saying that they don't think the Fed will continue to kind of rate hikes from here. Market's actually looking at probably a cut as early as July. I think that might be a little early in my opinion. But again, it does leave the door open for kind of further rate hikes from the Fed because, again, the economy and the labor market are so strong. So interesting to see how it plays out. Again, I think we're going to go from data point to data point, especially after what the Fed said last week, where they actually mentioned that there's going to be very, very, very data dependent kind of going forward. So on a very singular basis. So we start with tomorrow's number from the CPI perspective, and we'll see from there.
Speaking of that CPI number, what are we looking for, considering that I think in the past, good news was bad news and we didn't really know how to interpret the bad news?
Sure. So from a headline perspective, we're looking for it to stay at that 5% mark. From a core inflation perspective, we're looking at for it to go from 5.6 to 5%. So hovering where it's at the moment. The bulls will say that it's starting to come down and it's not kind of increasing. The bears will say that it's still very elevated at 5+%. So I think the market's going to pay a very, very close attention to that.
All right. On that note, let's leave it there. Thank you so much for your time. That is Martin Smith, is a portfolio manager at Anchor Capital, giving us his perspective on the latest when it comes to the markets and leading us into that all-important CPI print that will come out tomorrow.